What's up, guys? Eric here from MajorLeagueTrading.com, and in this video I want to break down two Microsoft trades that I took, why I took them, why I managed them the way that I did. And it's basically the same trade, but one time I used it as an exit, the reason for that, and the second time I actually used it as an entry, and that ended up actually working out a whole lot better for me. So we'll dive in and take a look at that in just a minute. First, I want to show you guys, this is how I start and plan every single day, is with this one-page plan sheet. It's how I come up with my plan for the day, what it is I'm going to be watching, the levels, and it just gives me my full rundown, and it sits right here on my desk every single day. There is a link beneath this video if you guys want to get that. And I'll show you right here what I put together every single morning when I'm looking at that list and I'm running down through it. So this is what I call my morning write-up. So every day I develop a plan of what it is I want to do. I write down some things, some notes for myself, and we're going to go back to Wednesday of this week. Now, Wednesday of this week was also FOMC. So we had a potentially really big rate decision coming up, which turns out to be a really big rate decision. And we kind of had the markets, sort of hanging in the ballast, if you will, as to whether or not we were potentially going to roll over from there or get a move higher. Now, again, I don't necessarily care what the rate is or isn't. I just want to see what the market does in reaction to that. But I say that to say that typically on FOMC days, we will see a little bit of a rally or a little bit of a sell-off in the morning, and then we'll kind of range bound out for the rest of the day. So in my mind, that's something I'm thinking is a potential possibility, is that, hey, we might get a morning push one way or the other, and then we'll kind of find our way back and, get back towards the middle ground of the opening print or something like that before the announcement at 2 o'clock. Past 11 o'clock, I'm not interested in doing anything either way. So that's the premise in my mindset going into the day. Here's what I ended up writing out about FOMC announcement. Comes out at 2. FOMC events get erased the next day. That's typically the norm. That didn't happen this week at all. It looked like it was going to at one point, but it didn't, which is completely fine. But anyways, we come down here, and these are the stocks that individual equities that I'm watching for the day. And what I wrote here was Microsoft over 261.06, and longs are on the table in here, but it may need to retest 259.98 before getting the move. Let that happen and get above 261.06s before entries. Now, I'm on a 2-minute chart right here. I went ahead and left in these two levels on the chart, 261.06s, and I'll actually just bring up a notepad so I can copy this over and it doesn't take up the full screen. Okay, so over 261.06s, looking for longs, may need to get that retest of 259.98s. First, let it happen, and then get above 261.06s for entries. So first things first, we need over 261.06s. We get the opening print over 261.06s. That's important. We pull back. Now, granted, we do trade, $1 or so through 259.98, but the second step to 259.98 trading, let it trade first, but it may need to get the move. Let 259.98 trade first before getting the move. Let that happen and get back above 261.06s before entries. So just because it's traded 259.98 doesn't mean I'm stepping in and buying. I have that second criteria, which is I want to see it back over 261.06s. We end up getting that here, basically within the second, 2 minutes of the day, second 2-minute candle here, and we rally all the way back above, and we reverse this prior red bar here on the 2-minute chart. So here's what I ended up doing in Microsoft for this trade. So again, I had all my criteria, I had everything set, and I was super patient for that to trade. Now, once we do get that push back up over, you can see I stepped in with 200 shares long here at 261.60. .6008 if you're being technical here. So I had two orders of 100 shares each. And those ended up triggering here. Actually, we can probably make this a 2-minute chart. Let's go back a couple days. There we go. All right. And zoom in. So I had my entries right there, 261.08. I let it get back up above this bar, which was 261.18. By the time I clicked the button, it had already jumped about 40 cents. So I knew, okay, boom, I've got my 200 shares. I've got my entry. I've gotten the criteria I need. Now, I also know that my target is up here about 269.40. That was this pre-market high from the, technically after hours high, 269.41s from the earnings announcement the day before. That's where I'm looking for us to rally and retest. I go, okay, 200 shares. I've got a 261.60 entry. I can't add any more because my stop loss is technically down here under 258.80s. If we do retest, I'm likely going to go ahead and kill it under 259.98. So I've got a little over $1.50 in stop loss on this. That gives me roughly a $300 stop on this trade. Granted, I could give it all the way down to here, but if it fails 259.98, I'm likely going to be getting out. These are all the things I'm thinking through as this comes about. So I've got about $300 worth of risk. I've got 200 shares on, and if it rallies the roughly $8, that's going to net me $1,600 on this trade, or a little over 5-to-1 risk to reward ratio, and that allows me on a first push to go ahead and lock in 25% of this position, which you can see here is what I ended up doing. So on the first push, we got about $1.50 here, which again is roughly what my stop loss is. I'm able to go ahead and lock in a quarter of this position. Hopefully that's all making sense. There's a lot of things kind of working through and thinking through with this trade as it's going, but that's my thought process is, okay, I can go ahead, I'm at 1R essentially here on this position. I'm up about $300 overall here. It's about $1.50 with a 200 share move. I can take 25% of my position off, hold the remaining 75% of my position, and if I can get that target at 269.40s, then I'm now looking at about a $1,200 trade on that 150 with this $1.50 already booked on 50 shares, about $75. So that's what I ended up doing, right? I ended up taking my 50 shares off, my first 25% of my position, and then from there, I wanted to let this work, and what I wanted to do, and what I did do, was trail 5-minute pivots. Now, what that ends up doing here for me on this trade is, as you can see, I end up placing my stop loss just under this low of 262.70. That was my mental stop loss. That's where I'm going. Okay, if we break under 262.88 or 262.70s, I want to go ahead and get out. On this bar, I saw us break down through this 262.70s. We traded 262.63s, and I went ahead and clicked the button to exit. Now, when I closed that remaining 150 shares, I got 262.88. I didn't have a hard stop in there. I just had a mental stop. I saw that it broke down. I came over. I clicked the button. And I guess we had, bounced a couple pennies here. And that ended up being my fill. Now, the low of this move is 262.63. But you can see what I'm watching here. This pullback should have held, and we should have rallied. But there is the potential that we have a lower high here on a 5-minute chart, and this market may not in fact be as strong given it's FOMC day, given it's coming into now past 10:30 on this trade. For me, that's past the first hour of the day, so I end up getting stopped out at 10:40, right? All of these things are coming into consideration, and I'm going, we're getting close to 11 o'clock. Market's likely going to start to go sideways here, maybe even get a pullback, and okay, we're breaking a 5-minute trend. Let me go ahead and take this position off. Now, fast forward a couple hours into the day, and we rally right up into our 269.41 target here after the FOMC announcement. Now, in hindsight, this looks like, oh, I wish I would have bought there, right? I wish I would have done the dare it to go lower play, which is the break of a pivot that then holds based on the larger time frame. Now, at the time, again, these are the thoughts in my head is we have the FOMC, we have the potential for this market to kind of chop around and do its thing for the rest of the day until 2 o'clock. I don't want to see this pull all the way back to 261s and give back the remaining portion of that trade. Now, the other part to that is we had traded up into 265, right, on the day. That gives me about a $4 target still left, right? 265 to 269 gives me like a $4 target left. Well, if I hold this thing all the way back to break even, I'm basically giving back $3.50 here, roughly $4. 261.60s is my entry. 265 back to 261.60s if I trail break even. Well, now my risk to reward on the total trade, just because it's moved in my direction, has shifted, and now it's basically 1-to-1, right? I'm risking $3.50 or so in order to try and make $4, right? If I give it all the way back to break even. So again, that's another reason for the stop loss here under 262.67s or 262.70s here on this trade is I'm giving back about $2.50 for easy numbers. I still have a decent target up ahead of 269.40s, about $4.50. And okay, I can do a $2.30, $2.40 stop loss back, right? Ends up being $2.12 here. So it's still 2-to-1 risk to reward ratio given where the stock is currently at 265s up to the 269.41s. So hopefully that's making sense. As your trade goes in your direction, you constantly have to be aware of how much room do I have to give it back in order to keep this trade on to the full profit target. And if that risk to reward ratio starts to get skewed, then one, it's likely not good for a new entry, which means that you should then manage it upon what it's currently showing you as if it was a new entry, right? And that's the way that I like to look at trades as I'm trailing them. So that's the first thing here. That's the first trade in Microsoft, and you can see how it worked out, obviously. What I want to do now is take it over to the next day, which ends up being Thursday here. And on Thursday, I'm watching the markets, and I identify in the morning some good relative strength out of Microsoft, right? Microsoft has rallied. It's the second day move after earnings. I've talked about this before. You always want to keep a list of names that have reported earnings and then the following day. Example, something like Goldman Sachs from 2 weeks ago. We get the gap up on earnings. The next day, it finally makes the move. Those second day earnings, sometimes those moves are even bigger. Walmart was a prime example from a couple months ago, right? We get the first day earnings move. This is a major, major trend break in Walmart. The next day, it has basically the same dollar move per day intraday as it did the previous day. $6.80, $6.74 the next day. Obviously, the gap here and there isn't quite as big, but the intraday tradable move was 6 cents different, right? So these second day earnings moves are really, really nice. They're some of my favorites, honestly. And I've got a list for this earnings season of all of the earnings names, and I'll be scanning those each and every week for those second day earnings moves and even past, right? If it's a potential trend change, it could change the course of that stock over the next few weeks to few months, even into the next earnings cycle, which would be coming around in 3 months, right? So I want to keep those on watch. Now, I noticed this relative strength in Microsoft. I don't do anything about it inside of this range right here. I go ahead and I let it rally. I let it pull back. I let it set this low here at 273.62. And you can see, this is just a 1 bar pullback on a 5-minute chart. This is a super, super strong trend. But what we do have in place is one, a nice solid daily trend change, an hourly buy setup rally into what I'm anticipating is going to be a 1, 2, 3 pattern on the hourly chart down here, and which ends up happening. And we have a little bit of relative strength, or I shouldn't say a little bit, we got a lot of relative strength to the overall market here. So on this trade, what I ended up doing was the same entry that had stopped me out the day before, right, where I took that 5-minute pivot trail, where I took that 5-minute pivot trail. This time I actually ended up taking my entry here. So I did a failure to go lower play on this, right? We had these lows here at 273.62s. We pulled back to 273.56s. And when we did that at basically 273.60s was where price was printing when I pushed the button, I stepped in here to the long side with the 275 calls. So just a little bit in the money there, right? Or sorry, just a little bit out of the money. 275s were printing 273.60s. So I stepped in just a little bit out of the money, but notice the difference between this theta that's already taken place in this option compared to the overall stock, right? You'll see that we've kind of moved into a downtrend here on the actual options compared to the stock. So this is just a very small tick under this low, as opposed to this low here being 157, this low down here being 131. So that's already dropped 26 cents, even though the stock traded like, what, 3 cents below, 273.62, 273.56, so 7 cents, right? We ended up getting a nice drop here in these contracts, given that, one, we're going to lose some IV, we're going to lose some theta, all of these things are coming into play with this, and the stock is potentially going to go a little bit sideways. Now, I took this failure to go lower pattern based on the same thing that had happened yesterday and the fact that we had the second day move, we had the hourly uptrend, we had the daily trend flip, all of these things, and I stepped in and I said, okay, here's a smaller risk to reward trade, a small risk, high reward potential trade, and my target on this trade was actually up into 278.77s, which gave me really, really good risk to reward ratio. Now, I didn't manage it all the way up there. It didn't actually trade that on the day, but here's how I did manage it, and it ended up working out for $2,410 with 20 contracts. Now, again, my entry here is $1.42. My stop on this trade was going to be under $1.30. So I'm risking 12 cents, maybe 13, 14 cents, depending on where I get filled on my exit for this, right? It did have a couple penny wide spread when I took the position. So I have 20 contracts on. Let's just call it 12 cents for easy numbers. That gives me a $250 risk on this total trade. Now, notice something consistent here with the trade from yesterday in Microsoft. Even though I used shares, I still had roughly a $250 to $300 risk on this trade. And I already booked some other trades here on the day. I'm typically not trading after noon anyway, but I already booked some decent profits, and I said, okay, I'll give a portion of that back on this trade if it's going to work here. So it's not sized to a full position, but if it is going to work, it's going to work really, really well. And it ends up being almost a 10R trade on this small risk. Now again, I had to be super patient for almost 3 hours, 9:30 to 12:15, for this trade to actually set up and provide me the entry. And you can see we took off some here into the new highs, 201s, 225s, 299s, and then the last little bit up here into 325s. And you can see as we're getting new highs each and every time, I'm going ahead and taking a certain portion of this position off. So when we break through up into new highs, boom, I'll take off half. Boom, when we continue to rally this, we pull back, we finally set a new pivot point. Boom, next time we rally up through that pivot point, I'm going to go ahead and look to take off some, right? In the event that it's going to give me a failure to go higher and, you know, we roll over from there, take out pivots and change trend, I want to be locking that in as we go. So there's a lot in this video. If you made it this 20 minutes, I appreciate it. Hopefully you guys learned something in this video. If so, give me a thumbs up on the video. I want to go ahead and cut it there just for the sake of time. And I really didn't have a chance to look at the markets with this trade as I'm, you know, talking through and watching them as well. Or this would end up being like a 40 or 50 minute lesson here, as opposed to this not so short but quick 20-minute video. So hope you guys, it's Saturday. Hope you guys all have a great weekend, and this earnings season is treating you well. Again, if you like the video, give me a thumbs up, leave me a comment below, and hit that subscribe button, and I'll see you guys back for the next video. Take care.